In our today's video we are going to learn advantages and disadvantages of liquid funds. So let's go. Advantages of liquid funds. 1. Liquidity. Liquid funds provide high liquidity, allowing investors to redeem their investments quickly and easily, usually within 1 to 2 business days. This makes them suitable for parking idle cash or for short-term needs. 2. Capital preservation. Liquid funds focus on investing in short-term, low-risk instruments, aiming to preserve capital. The underlying securities typically have a low credit risk profile, reducing the likelihood of default. 3. Diversification. Liquid funds invest in a diversified portfolio of short-term instruments issued by different entities. This diversification helps spread risk and minimizes the impact of any defaults by individual issuers. 4. Stable returns. While the returns from liquid funds may be relatively modest, they are generally stable and in line with prevailing short-term interest rates. These funds aim to provide consistent and predictable returns, making them suitable for investors seeking stability. 5. Cost efficiency. Liquid funds typically have low expense ratios compared to other mutual fund categories. The lower expenses contribute to the overall returns for investors. Disadvantages of liquid funds. 1. Lower returns. Compared to other mutual fund categories that carry higher risks, liquid funds tend to offer lower returns. They prioritize capital preservation and liquidity over generating higher yields. 2. Interest rate risk. Although liquid funds have relatively low interest rate risk due to the short maturities of their underlying instruments, changes in interest rates can still impact the fund's net asset value, NAV, and returns. If interest rates rise, the NAV may decline, resulting in lower returns. 3. Credit risk. While liquid funds invest in high-quality, low-risk instruments, there is still a potential for credit risk. In the event of a default by any of the issuers of the underlying securities, the NAV of the fund may be affected. However, the risk is relatively low due to the fund's diversification practices. 4. Taxation. Liquid funds are subject to taxation on short-term and long-term capital gains. Short-term gains, held for less than 3 years, are taxed at the investor's applicable income tax rate, while long-term gains, held for more than 3 years, are taxed at a flat rate of 20% with indexation benefits. 5. Inflation risk. The returns generated by liquid funds may not keep pace with inflation over the long term. Inflation erodes the purchasing power of money, which means that the real value of the returns from liquid funds may decrease in terms of purchasing power over time. It's important to assess the advantages and disadvantages of liquid funds in the context of your investment goals, risk tolerance, and liquidity needs. Consider your investment time horizon, expected returns, and the role of liquid funds within your overall investment portfolio. Consulting with a financial advisor can provide personalized guidance to help you make informed decisions based on your individual circumstances.